Hey, good morning, everybody, and welcome to another Tuesday morning coaching call. This one's a little bit different than normal in the fact that it started at 10 versus 9 o'clock Pacific time. We did that to accommodate a special guest that we're going to have today. So apologize for any inconvenience if that caused any Mortgage Coach members. These calls are typically 9 o'clock Pacific. Today was 10 o'clock. So you know that if you're on the call right now. My name is Dave Savage. I am the CEO of Mortgage Coach, and we are working hard to help you with the best sales experience for both home buyers and realtors. So if you're new to this community, if you're new to the Mortgage Coach team, the concept of going from being a note taker, an app taker, to being a mortgage coach, where you've got an integrated experience for both the home buyer and the realtor, where you are more than just a loan officer, you're a mortgage coach. You're delivering advice. You are reinventing the mortgage experience for home buyers and realtors in a way that has obvious value. So to help me on today's call, and as he co-hosts the call, I've got Mr. Jim McQuaig. Jim has been on this call many of times. I've interviewed him for the Mortgage Coach community. He's a manager, branch manager. He has been a top producer at different times of his career, and he is definitely an originator that delivers advice. How he counsels customers, home buyers, and realtors, it has obvious value. Jim, welcome to the call.
Thanks, Dave. Happy to be here.
Yeah, well, it's good to have you, my friend. Since we don't know exactly when Ric Edelman is going to join us, feel free to add some value along the way as I set the table.
Okay, no problem.
All right. So our special guest, Ric Edelman, has been named the #1 financial planner in the nation. So I'm always trying to bring in great leaders. Anybody who's listened to me teach, present, interview both guests and top loan officers knows how passionate I am about the loan officer being very intentional about the wealth team. And the wealth team surrounds the home buyer. It's the realtor. It's the financial planner. It's the CPA. So I'm always looking for great guests, and this guest is not just a top financial planner, but he's a celebrity. I mean, he's got his own radio show. I'll do a more formal introduction when Ric joins us, but he's going to share some great insights. So stay tuned for the introduction of Ric Edelman. If you are new to the Mortgage Coach community and this is the first time you've been on a coaching call, make sure you connect with us on Facebook, LinkedIn, YouTube, Twitter. If you have not already subscribed to our YouTube channel, make sure that you do so that when we push new videos into that channel, you get an alert. Anybody that is a subscriber, you got an alert this morning saying that we have a new feature around escrow reserves. There's a number of new features that were pushed into Mortgage Coach, but one of the ones that we've got the most requests, the most things, are the escrow reserves. So there is a video. It's a quick 8-minute video from our support team describing this. Jacob Gibbs, if you're on the call, would love to have you just provide 1 or 2 minutes of updates around the, whatever you want to say about this most recent update and this specific feature.
Sure, thanks, Dave. So this specific feature, we've had a lot of requests for quite some time now to be able to add reserves in the form of months rather than having to manually calculate them. To date, what you've had to do is you've had to jump over and check out what your hazard insurance is. You'd have to multiply it by 3 to get your 3 months of hazard. Then you'd have to jump back over to your closing cost details and enter it in there. So that creates kind of a loop for everybody. So we found a way around it. What we did is, as you can see on the screen here, Dave is showing you the monthly cost section on any new product in Edge. And this is both on the client side and the partner side. So now you have the ability, once you enter in your hazard insurance and your property tax, and you can do it either in the form of a percentage like you see on the screen, or you can enter it as dollar amounts, you have the ability down below now to enter the number of months for reserves. There's also check boxes just to the right of those if you want to collect a 12-month premium. Now when you do that, what happens is as soon as you enter those months, it automatically pipes those back as line items back to your closing cost details. Now the great thing about this is you can actually set these up in your templates. So now you can have all your reserves preset in your template. So as soon as you enter your hazard insurance, or if you've got your ratios in your template, it'll automatically populate those reserves for you. So this should save you a ton of time when you're going through your costs, because now you don't have to calculate any of your reserves. They're going to pre-populate for you as long as you put them in your templates. And if you don't, all you need to do is put in your months there, and it'll automatically pipe it back into your closing cost details and be part of your prepaid escrows category. So with that said, if you guys do have any questions, this video is actually already in our knowledge base, and in order to get there, all you have to do is when you're inside Edge, click on the help button up towards the top of the screen. It's right next to that sign out button. That'll take you straight over to our knowledge base, and then in the search box, type in reserves. That's going to take you straight over to the article we just posted that has not only the video tutorial, but kind of a brief explanation of what it covers. Now, it is located on YouTube, so if you have a problem watching YouTube, just send our support team a quick note at support@mortgagecoach.com. Let us know that you're not able to watch it on YouTube, and we'll see if we can get you a hard copy of the video to download direct. But with that said, what many people do when they run into that problem, watch it on their phone. So you can always pull up a YouTube on your phone if necessary and just kind of follow along with it while you're watching it and see if you can mirror the process in your Edge. I think you're going to find this is a very valuable addition to the software, and it's going to make it a lot quicker for you to really crank out those first 20 total cost analysis so you can make it a habit. So Dave, thank you very much for allowing me to talk about it. I'll go ahead and pass it back to you.
Yeah, no problem. Great job. And big kudos to the entire team. I mean, we're always focused on how to help you as mortgage originators deliver a more accurate rate quote, more transparent advice, and to do it faster and easier. So this is just a good example of how we're doing that. It's critical that if you don't understand the template that Jacob talked about, come to our Thursday call at 9 o'clock, and he'll walk you through those templates. And it's critical that you know how to create a strategy template. So if you've got an FHA versus a conventional, make sure you go to that, and Jacob will show you how to copy one FHA versus conventional strategy into another one. And literally you can make that scenario within a matter of a minute. Or think about a really complex scenario where it's PMI versus no PMI. Imagine if you could reduce some of your data entry and leverage some of our shortcuts. So if you don't know what I'm talking about and you're on this call, you're like, what's they talking about? Thursday at 9 o'clock, and Jacob and the team will teach you how to really go deep on that new feature set and how to use templates. So I want to do a little bit of follow-up from last week to make sure we really anchor some of the messages from last week. I talked about how important it is that you are very intentional around your why and this concept of changing the world. We had a great video from a military leader that's still on our Facebook page. If you missed that, you didn't click on it, make sure you do. Also, great video that I posted this week. It starts with Why by Simon Sinek. This is an important video. It's going to be part of our training next week. I'm going to be having Tim Brahim and Ken Perry do some as our guests next week, and we're going to be doing training on how to grow your personal why, how to do that at a team level with your entire team, and how to build out your perfect loan process. So so that you've got a perfect, compliant sales loan process. So don't miss next week's call. And if you have not watched this video, make sure you watch it. You can click on it from our YouTube page right now. So last week I interviewed Ryan Hills. I've got a lot of great feedback on that. I had people at the mastermind event that I was at this week come up and say, wow, that guy is amazing. I mean, he's got some videos that have been watched hundreds of thousands of times. Every video that he creates, he's built a platform that gets watched, probably 5,000 times on average. So this guy is not your average loan officer. He's not your average video entrepreneur. I'd say this is a super show. I mean, when we really drill down on the time he spends to prepare, the time he spends to actually edit and make videos that are just awesome and best of breed, I'm not evangelizing that everybody on this call should be doing that. What I'm evangelizing is that everybody should be using video as a strategic component to your value proposition and how you deliver advice. So just want to do some reminders that if you didn't watch the video or you missed last week's call, check it out. I think it's a cornerstone of value for a mortgage coach, where Ryan talked about his why as a loan officer and as a video leader. He really gave a lot of description to that. He also drilled down on his personal why as a mortgage coach leader, why he uses mortgage coach. Everybody who comes to this call, you come to this call to be more successful as a mortgage professional. And because you all invest in Mortgage Coach, our tools, Edge, Rate Watch, you really want to get better at doing those things. So as I have mentioned multiple times, the loan officers that I talk to that are very successful as mortgage coaches, they all have a very articulate, very personal why they are a mortgage coach member. So if you haven't done this already, make sure that you're clear on what is your why. You know, when it comes to my why and the mortgage coach why, we just believe that great service and mortgage advice is the ultimate competitive advantage for a mortgage professional. It's really that simple. If you believe in this statement that great service and mortgage advice, you want that to be your competitive advantage, well, then you're going to be attracted to our values. You're going to be attracted to what we do and how we do it, because it's all about wow. That's the cornerstone, always surpassing the expectations of our home buyers and our realtors and delivering mortgage advice that matters. Now, how do we do that? We very much believe in transparency. We very much believe in you've got to always show the cost of time of different mortgage strategies, whether or not you're accelerating the payoff of your mortgage, which some leaders, some financial planners get behind, or whether, like Ric Edelman, our guest today, you're recommending that get a big, long mortgage, which Ric is going to describe in more detail as he joins the call, and how that is a faster way to do things. And then, of course, we believe in mortgage options. Just quoting rates, shouting out a rate quote, we don't think that's transparent. We don't think that's cost over time. We believe in options. Give people options. So hopefully everybody on this call, you're growing your why, you're growing your tactical ability to do that so that you can help home buyers and families, help realtors buy homes, and you can do it in a way that really changes the world, helps America make better financial decisions. Ric, did you just join us?
Yes, I did. Finally managed to get the modern technology to work. Sorry for the
Well, fantastic. It's good to have you, and I have to say your timing could not have been better.
Well, that's what they often say about me as an investment advisor. My timing couldn't be better.
Well, you definitely did it as a guest to Mortgage Coach. So you missed some of setting the table and some of framing the call. I have Jim McQuaig, who is on the call. He is a loan officer and a producing branch manager, and someone that's been a fan of yours, read your books back when you and I think, met several years ago at different events. Jim has also seen you speak, so it's good to have you back in the Mortgage Coach community.
Thank you so much. I've been a big fan of yours for many years. You're doing a great service for mortgage brokers across the country and loan officers, and I'm happy to be on the program with you today.
Good, good. Well, we're going to do this much like a radio show. I do want to, some of the folks on the call know you and know you well. Some of them may not know you as well. So I do want to start setting the table around a little bit of who Ric Edelman is for anyone that does not know Ric. He is an author. He is a speaker. I think why it matters to know who Ric Edelman is according to Barron's, he's the #1 financial advisor in America a couple times. Helps over 24,000 families with their financial planning. They trust him, and he manages over $12 billion. He also happens to be a very respected thought leader among a lot of Mortgage Coach members and other thought leaders in the industry. Ed Carnacki, who is a friend of Ric's and someone that follows him very closely, actually helped me prepare for this call, and I thought what Ed said was pretty nice. Ric is the most valuable advocate to the mortgage industry has going. Ric is the first financial advisor that has been able to prove and, more importantly, teach that the mortgage is not just a necessary evil. The mortgage is, in fact, an important financial planning tool, not just debt. So Ric, I know you're pretty busy, and thanks for making time for the call. In fact, I heard that you were on Fox and Friends this morning, and I don't know who you were speaking to as you jumped on this call, but if you could just give Mortgage Coach members a little bit about who you are and your mortgage practice and some of your goals, and then we'll get into a conversation.
Sure, happy to. I'm a financial advisor. I own, as you mentioned, one of the largest financial planning and investment management firms in the country. And for 20-plus years, I have had a rather unusual point of view about mortgages compared to most in the financial planning community. The traditional mantra among financial planners has been to pay off your mortgage as soon as you can, to get as small a mortgage, make a big down payment, get a 15-year loan to get rid of the mortgage as quick as you can, make extra payments, on and on and on. And when you talk to advisors about why, their attitude is, debt is bad, this is the way it's always been done, this is what my daddy taught me, and my daddy's daddy taught me, this is the way it's always been through the Depression. And they point to the Great Depression when millions of Americans lost their homes, and they point to 2008 more recently as evidence of mortgages being bad because look at all the millions who've lost their homes as a result of their mortgage. And so the average typical financial advisor says, I don't like mortgages, and I don't want my clients to have them, and if they've got one, I want to help them get rid of it as quick as they can. And there are pundits out there, Susie Orman and Dave Ramsey, perhaps the most prominent, who advocate the very thing of paying down the mortgage as quick as you possibly can. For 20-plus years, I have said the exact opposite. When I became a financial advisor back in the 1980s, I, too, saw the traditional typical advice that was offered by my brethren, and I said to myself, why? Why is everybody advocating paying off a mortgage? And I could not find any research on the matter. I couldn't find any evidence. I couldn't find any studies that articulated empirically, mathematically, economically, why you should get rid of a mortgage, why you don't want a mortgage. And so I did my own research. I did my own analysis, and I concluded that everybody else is wrong. I concluded that, in fact, having a mortgage is a tremendously powerful financial tool. It is a terrific way to help you achieve your financial goals. Having a mortgage is actually a safer strategy than not having a mortgage for a great many people. And so I began to talk about this on my radio show, which I've now been doing for 23 years. And I started talking about this, and I got branded pretty quickly as heresy. How dare someone who claims to be a financial planner suggesting that people get a mortgage and get a big mortgage, as big as the mortgage as they can. If they've already paid off their home, go refinance. In fact, if they've already got a mortgage, cash out. Do a cash-out refi and increase the mortgage size. This was heresy. I got profiled in the Washington Post, and they called me unconventional. Financial Advisor magazine profiled me and called me controversial. And I wouldn't shut up about it because I was convinced that I was right, that my data and analysis were accurate. Nobody was able to contradict what I was saying other than simply saying that's heresy. They weren't really able to articulate why. And finally, because I wouldn't shut up about it and I had a pretty strong bully pulpit, my radio show now reaches about 1 million people a week all across the country. So because I kept talking about it, I was kind of forcing the financial planning community to talk about it. And eventually, it resulted in somebody saying, let's do a study. And so academics got involved. Well, now you fast forward 20 years, and there have been more than a dozen studies done by universities and think tanks, even government agencies, both here in the United States and in Great Britain. And every single one of these studies, which have analyzed the mortgage question from a variety of different perspectives, every single one of these studies reached the same conclusion. I'm right. In fact, carrying a mortgage can be one of the smartest and safest strategies you engage in from a financial planning perspective. So I have become, frankly, the new best friend of many in the mortgage industry because I'm not a mortgage broker. I don't own a mortgage company. I'm not suffering from a conflict of interest. Obviously, when a mortgage broker tells a client to go get a mortgage, well, you know, why should he believe you? You're just a salesman pitching a mortgage. There's an obvious conflict of interest there. But when I say it as an independent, objective, fee-based financial advisor with no skin in the game, it doesn't make any difference to me whether you do or don't get a mortgage from my own personal self-interest. It allows me to serve as an independent, objective third party endorsing what it is exactly you mortgage brokers, loan officers are trying to do, which is to convince people that they need to get a mortgage. And in fact, they need to get a big mortgage. So I have become, over the past couple of decades, a very strong asset for the mortgage community because I can convince consumers to do what you're trying to convince them to do, but I can do it more easily. I can do it more effectively because consumers know they can rely on me and count on me to give them independent, objective advice that is in their best interest. And oh, by the way, it just happens to be that what's in their best interest is also what you're trying to accomplish. So mortgage brokers, loan officers love the message that I convey because it's helping everybody get done what needs to get done.
Well, hopefully we can figure out a way that when we have a cash buyer in many markets, cash is still a competitor. We can bring you into the conversation. So I'm looking forward to sharing perspectives that will be useful to our community. I have to say Mark Brogley is a tremendous evangelizer of your mission. And so it's good to reconnect with you in the mortgage coach community. I've heard you speak many years ago, but I think the timing couldn't be better. So let's keep this conversation going. One thing that I think everybody can agree with, regardless of whether or not you're in the, hey, let's prepay debt as fast as we can, or let's be strategic about this from a long mortgage perspective, maximize tax benefits, really be thoughtful about how we're investing our margin. One thing everybody, I think, agrees is that the mortgage decision for most Americans is the biggest financial planning decision they make. Yes, there is a very small percentage of the population where it's the diversification of their assets, but so many Americans, it's that mortgage decision is really a cornerstone decision. Now, Rick, I've heard over the years different economists, different studies, talk about how much money people have when it comes to retirement age. I've heard like the average in certain ages is like 100,000, and I've also heard studies that talk about through the misconsumption of debt or through making poor debt decisions, people misconsume hundreds of thousands of dollars. So it's kind of like this problem in America where we waste more money in debt than we actually have when it comes time to, hopefully our freedom point, where we really, we rely on our nest egg of what we've saved to carry us through. So are there any facts that you could share to mortgage coach members right now that would help them really make the case around your mortgage decision is a huge strategic financial planning decision?
Yes, and in fact, I have identified 11 great reasons to carry a big, long mortgage. I produced, Dave, as you know, a video to this effect about 15 years ago. It has gotten a bit out of date. When I first came up with my strategies, I only had 5 great reasons. Over the years, I've identified 6 more, and now have a total of 11 great reasons to carry a big, long mortgage. And we have just shot the new video. It's in post-production now, and we will be releasing it in probably about a month to explain once again in current economic terms with what's happening here in 2014 exactly why consumers ought to do this. And we're happy to share this information with mortgage brokers around the country to help you facilitate your efforts to communicate with your prospects and your current customers and your prior customers to help them understand how best to handle this situation. I can go through a couple of ideas here out of that list of 11.
Yeah, well, just to give you a heads up, I did pull up a few of from your blog post. I'm showing it on the screen right now, which you may be able to see, you may not be able to, but it has 11 great reasons to carry a big, long mortgage. So I do have that up and would love to have you walk through it. For everybody who's listening to Rick as he goes through and shares some of his perspectives, I also have some great quotes. Thank you, Mr. Ed Karnacki, for helping me prepare. So some of the quotes that he has from you, I'm going to have as a montage while you're sharing your thoughts. So go ahead and share some of the reasons that you think having a mortgage makes sense.
Okay, well, reason number 1 is that mortgages don't affect home values. And you're right, Dave, I don't have the luxury of looking at the screen. I'm here in New York. I just gave a presentation to the Exponential Finance Conference sponsored by Singularity University to a bunch of Wall Streeters. So I'm in a green room right now without access to a PC. The first reason is that mortgages don't affect home values. Your home is going to grow in value whether you have a mortgage on it or not. Or it's not going to grow in value. Look at people who bought homes in 2007, what happened over the next couple of years. So the mortgage has no impact on the home itself. And think about it when you're buying a house. You ask lots of questions of the seller. You ask, what are the property taxes, and how old is the roof, and how good are the schools, and by the way, what's the price of this house? You ask a lot of questions of the seller, but one question you don't ask, what's your mortgage balance? you couldn't care less what the mortgage scenario is of the seller. The mortgage has no impact on the value of the home. So we recognize that mortgages are not negative. They aren't going to hurt you in terms of the value of the home, and that's the reason number one. Reason number two is that, likewise, mortgages don't prevent you from building equity. People think it's great to have a lot of equity in their home, so they pay cash for the house, so that $300,000 house, so they've got $300,000 worth of equity. But that's silly, because over time, you're going to build equity even if you don't try, because as you pay down the mortgage, you're automatically building equity, and the home is rising in value as well. So you fast forward over a couple of decades, you're going to have a massive increase in equity in that house, partly because of the pay down and partly because of growth in the value of the asset. Reason number three is that mortgages are cheap money. It's the cheapest money you'll ever borrow compared to student loans, car loans, credit card loans, and personal loans. Why on earth would you not want to borrow today at 3 or 4% for 30 years? So clearly it's the best opportunity. Reasons number 4 and 5 are linked. Mortgage interest is tax deductible and tax favorable. We all know that tax deductibility makes the mortgage cheaper than it appears. A 4% loan doesn't cost you 4%. And the mortgage interest is tax favorable because when you pay mortgage interest, you're paying it at your top, the tax deduction is at your top tax bracket. But when you invest money, the profits are taxed at only 20% under capital gains. So it's a wonderful delta that you enjoy. The arbitrage is a wonderful opportunity because you can save money at 33% and earn money at 20%. So it's a great benefit that Congress provides us. Reason number 6, and this is probably my favorite, is that mortgage payments get easier over time. You go with a 30-year fixed-rate mortgage, that payment will be the same for 30 years, but your income will rise over the next 30 years. And as your income goes up, it gets easier and easier to make the monthly payment. Your income will double at some point, which means the mortgage is now twice as easy to make as it was when you first got the mortgage. So we have to remember that this is a long-term strategy, and that is perfectly in sync with the rest of financial planning. Reason number 7 is a really big deal during the 2008 credit crisis. There are lots of people who have told me that they wish they had listened to me back in 2006 and 2007. Back then, there were a lot of people expressing fear. You might remember this, Dave. A lot of people were expressing fear in 06 and 07 at the incredible run-up in real estate prices. I mean, real estate prices doubled from 2000 to 2006. Many markets, they tripled. And a lot of people were getting worried, and they said, boy, I'm afraid that housing prices are going to fall. And I would say to them, well, then sell your house. And they would reply, I don't want to sell my house. I like my house. My spouse loves the house. My kids love the house. It's close to schools and work and shopping. I don't want to sell the house. So they didn't. And then 08 came along. The house indeed fell in value, and they wished they had done something about it. Well, what they could have done about it is what I advised them to do, which is take advantage of reason number 7. Mortgages let you sell without selling. If you've got a $300,000 house, you can get a $300,000 mortgage on that house without having to sell the house. You can pull the equity out, which is the same as selling it, and you just pay a small fee in terms of the mortgage interest rate. So selling is easier by getting a mortgage, and I think a lot of people don't understand the true value of that. Reason number 8 is that mortgages let you invest more money more quickly. And that's related to reason number 9. Mortgages let you create more wealth. This is a really pivotal point. Because if you listen to Susie Orman and Dave Ramsey and other pundits who tell you to go with a 15-year loan, to make extra monthly payments, to go with a bi-weekly mortgage, if you follow those strategies along with a big down payment, if you do what they tell you to do, and they tell you to do those things because they're telling you to get rid of the mortgage as quick as you can, save all the interest that you would otherwise spend on the mortgage, become debt-free, and their strategies are designed to show you how to do that. If you do what they tell you to do, you know what's going to happen to you, Dave? You're going to be debt-free. You will, in fact, pay off your mortgage. In other words, Susie and Dave are right. Their strategies will, in fact, enable you to become debt-free. But you see, I'm not a debt counselor. And I'm not really talking to the young and the stupid. I'm not really interested in helping an ordinary consumer become debt-free. My goal as a financial advisor and investment manager, my goal is to help you create wealth. And if you create wealth, who cares if you have some debt? Do you think it matters if Bill Gates has a mortgage on his house? So what? He has enough wealth to be able to pay it off whenever he wants. And isn't that the point? A lot of people fear that they don't want to enter retirement with a mortgage out of fear they won't be able to afford the mortgage. Well, that just means they're financially failing. If you enter retirement with millions of dollars, who cares if you have a $500,000 mortgage? The key is to be able to afford the mortgage. The key is to be able to pay it off, should you so choose, without the obligation to pay it off if you choose not to. So my notion is this. Instead of sending $100,000 to a bank or to a mortgage company or to the seller, instead of giving them $100,000 in cash to avoid a mortgage, take the mortgage and then you get to keep your $100,000. That enables you to invest the $100,000 that you otherwise would not have had to invest. And because you get to invest the $100,000, you're going to create more wealth more quickly than you otherwise would. And as a result of creating more wealth, you're going to be able to achieve your financial goals, live in financial comfort and security without the strife, without the threats of running out of cash. And in fact, that leads to number 10, which is the biggest reason for carrying a big, long mortgage. Reason number 10 is that mortgages give you greater liquidity and greater flexibility. We've all encountered these individuals so-called house rich and cash poor. The individual who they got a $500,000 house, it's fully paid for, they have no mortgage, and they also have no money. And they're struggling on a meager pension, Social Security to pay their bills in retirement. That's not financial security. That's not financial comfort. By having a mortgage, you get to keep your cash. And by having your cash, you are able to buy medicine, clothes, food, spoil the grandchildren, travel, enjoy yourselves, and so on. And I provide in the new video that I'm putting together terrific examples that illustrate very clearly the difference between someone who tries to pay off their mortgage versus somebody who uses their mortgage as an outstanding financial tool because it is something that really makes a big difference in your lifestyle. Remember, the key isn't dying debt-free. The key is dying having lived a life that is full and happy, and a mortgage is a tool that enables you to help do that. And that takes us to reason number 11, my final reason, and this is where I really have a big issue with Susie Orman because she really promotes the notion that owning your home outright, being debt-free is a wonderful thing. The American dream is owning home outright, she says. It's a lie. It's a total lie. It is impossible to own your home outright. Go ahead and give it a try. You'll never succeed. You know why? Simple. You can pay off the mortgage, sure. That eliminates the P in the I. But what about the T in the I? We all know what PITI is. Sure, you can get rid of the principal and interest payments on the mortgage, but you can't get rid of the taxes, you can't get rid of the insurance, and you can't get rid of rooming. Repairs, upkeep, maintenance, and improvements. You will own that home, you're going to have to deal with the water heater and the roof and the lawn. You're going to have to incur these expenses. Whether there's a mortgage or not, you're going to incur carrying costs on that property, and if you don't have any cash to be able to pay for those expenses, you're going to be in a world of hurt. You're going to be forced to sell that house you're desperately trying to keep. So we have discovered for all these 11 reasons that carrying a big, long mortgage is, in fact, we believe, the smartest and most flexible strategy available to the vast majority of Americans. And by extension, as my video series is going to explain, a 30-year loan is better than a 15-year loan. Never make extra monthly payments and never participate in biweekly mortgage plans. So we are putting all of this material together that will be available online. It'll be available on DVD. It'll be available in print. All of these tools we're going to make available to mortgage brokers to help you facilitate the relationship with your clients so that instead of you saying all these things to them, let me say it for you so that I can become an advocate for the message that you're trying to convey, and we believe that it will be very helpful to mortgage brokers in your efforts. But there's a real key point to really, truly being able to make this happen.
So love the mission, love the vision, as an industry leader, having someone like you evangelizing the value and the strategic financial planning value of a mortgage is fantastic. I do want to push a poll because as we bring Rick into the mortgage coach community to evangelize his mission, his values in the industry, I want to get an idea of how many of you knew Rick prior to this call. So I have just pushed a poll out. I'd love to know, prior to today's call, did you know who Ric Edelman was? Yes or no? Just real simple, yes or no. And then Jim McQuaig, you've been listening to Rick go through his 11 reasons to have a mortgage. Any questions or any thoughts come to mind from a leader who's not only doing loans but managing loan officers that are doing loans? What are some of your thoughts and questions for Rick?
Well, Rick, when you were talking about the meltdown, and that back in that time, I was doing exactly what you were talking about. The whole idea of taking cash out of your mortgage to create safety and liquidity, particularly in a time when you may have concerns about the value of your home. That's exactly what we were doing, and I can't tell you how many customers I have that thanked me for that strategy, 5, 6, 8 years later, because it did allow them to keep their home. Some of those people lost their jobs in the downturn, and they were able to ride it out. In fact, some of them are your customers. I actually live not too far from you in Great Falls, so it's been nice working with a few of your clients just because we're on the same page. So great strategies. I love the way you've laid it all out in these 11 reasons, and I think that's a tool that the mortgage coach community can really use effectively.
Well, I appreciate that a lot. There's 2 key points that I want to mention. Actually, both fall under one umbrella. If you're really going to make these strategies effective, if you're going to integrate them productively in your practice, you've really got to do one fundamental thing. You have to shift the approach that you use in selling mortgages. Many mortgage brokers, in my experience, and as Dave mentioned, he and I have done lots of presentations together over the years at conferences, coaching conferences, and others, and I'll be back on the road this year and next year doing those kinds of events as well with Dave and others. And what I have often found is that many mortgage brokers, frankly, are hired guns. They consider themselves salespeople, and they will do what it takes to make a sale. That kind of approach is effective. I'm not knocking it. I'm simply saying that if you are going to take the approach of pure salesmanship, the notion of advice-based selling isn't in sync. So it's very difficult for just a pure salesman to effectively convey financial planning advice and concepts while acting as a salesman. My advice is that you need to act as a counselor. You need to act as an advisor. You need to be consultative. You need to be someone who is helping your clients solve problems, meet needs, and achieve goals. And that means we need to look at the mortgage within the context of the financial plan. Let's face it, that mortgage purchase, that home ownership purchase is the biggest financial transaction of their lives. They'll never again write that big a check for anything else except for maybe their next house. So we need to treat it with the sobriety and the seriousness that it demands. And that means we need to pay attention to the price of the house first and foremost. While I advise that you get the biggest mortgage possible, I am not advocating that you buy the most expensive house possible. Quite the opposite. I believe that you should buy the cheapest house that meets your family's needs now and in the future, and then go get the biggest mortgage on that house. But if you get too expensive a house, you set yourself up for financial failure. If you exceed the loan guidelines, and we all know what they are, if you push the envelope for the house of your dreams, well, that's when financial strife can occur, because now you're finding it difficult to afford the other things of life, to afford car payments and college payments and clothes and medicine and all that other good stuff. So we want to make sure we're not allowing our clients to spend more than they can truly afford. This goes back to your comments about 2008. I'll say something that'll sound shocking. No one in America in the '08 credit crisis. No one in America lost their home because of their mortgage. That's a myth. They lost their home because they had bought a house that they couldn't afford. And whether there was a mortgage involved or not had nothing to do with it. They were going to lose that house anyway. When they lost their job, they were going to lose the house anyway, whether there was a mortgage or not. So we need to recognize that mortgages are not the bad guy here. The price of the real estate's the bad guy. So if there's a culprit somewhere, often as not, it's the real estate agent, because they're pumping people to buy a more expensive house, because the bigger the house, the bigger their commission. So we need to recognize that the home purchase process needs to fit within the context of financial planning. And therefore, in the context of financial planning, we need to act as advisors to help guide the client as to how they should be handling their mortgage relative to their desire to save for college and save for retirement, because mortgages can facilitate those goals. It can facilitate the efforts to achieve those other objectives. And so we need to work very carefully within that context. If you come off as someone who says, yeah, I'm a mortgage guy and I can get you the best rate everywhere and hurry up, sign here, that's just a hired gun acting as a strong-arm salesman. But if, on the other hand, you say, I'm really excited that you're trying to buy a house, I want to help you achieve financial success, and my strategies can help facilitate your ability to do that, because if you handle your mortgage correctly, it can make it easier to save for college for your kids, easier to save for your own retirement, using the strategies and advice that I'm providing. And I think that it's important that you be willing to adapt an advisory stance, looking out for the best interests of your clients, even though legally you might not necessarily have to do that. It's the right thing to do. Clients will perceive you as genuinely helping them, and it will result in a bigger, more successful practice for you.
Makes a lot of sense. So when I did the survey, just for anybody who's wondering, about 33%, 66% said, yes, I know Rick, and 34% we have introduced you to Ric Edelman for the first time. So just an FYI for you, Rick. You know, this is exciting for a lot of reasons. Again, I'm very passionate that the mortgage is a strategic financial planning decision. I am not a financial planner, but when it comes to helping mortgage professionals deliver mortgage advice in a very transparent way, where they're showing mortgage options, where they're showing the cost of different strategies over time. Yeah, I mean, I've dedicated most of my adult life to helping loan officers be advisors, not app takers, not shouting out rates, being a rate hacker, but providing mortgage advice. So it's exciting to me, regardless of who the speaker is and what the philosophy is and who the financial planner is, that people are intentional. So my message to Mortgage Coach members, and Rick, feel free to adjust this, is I'm not saying be financial planners and sell specific financial planning advice. I'm recommending that you're a member of the wealth team. Your job is to show people the cost of different strategies over time. It's to introduce them to financial leaders like Ric Edelman. So he is going to be coming out with a program that provides content to mortgage professionals. Yes, I think that content is going to be fantastic, and I think that you should introduce that to folks. I also do think you should have relationships with local financial planners in your local marketplace, and you should be able to deliver mortgage advice in a way that's relevant to your customer and that integrates with whoever their financial planner is. I do want to, you know, I've positioned this video from Todd Duncan, and Rick, I don't know if you remember Todd Duncan or not, or whether you shared a stage with him, but he's one of the bigger speakers in our industry, and he's got some very big events, you know, where thousands of loan officers come to every year. And he does a great job of evangelizing the fact that there should be a total cost analysis, not just a rate quote. So I want to showcase Todd's Edge video to Mortgage Coach members. If you go to our app and you put in Todd Duncan, it'll actually drive his total cost selling scripts for both realtors and borrowers. And hopefully, Rick, as part of your coming into the Mortgage Coach community, we'll have you putting some of your thoughts into our platform. And, of course, we will be evangelizing your platform. Rick, real quick, right now is the main thing that you want people to do is to go sign up for your blog, your website. what is the call to action so that mortgage coach communities can make sure they're connecting with you after this phone call?
Yeah, I appreciate your offering that, Dave. Let me tell you what we're really trying to put together. My firm, as Dave has mentioned, has 25,000 clients around the country. We're adding 4,000, 5,000 new clients a year at this point. I have 35 offices around the United States, coast to coast, and more than 100 financial advisors. And
Wow.
Because we're engaging in the financial planning process on a routine basis with our clients, we routinely uncover the need for our clients to improve their mortgage situation. Our clients are also often selling homes and buying new ones. They're buying second homes, et cetera. So it's very common for us to need to refer our clients to a mortgage broker. And so we are in search of talented mortgage brokers who get it, who understand the role that mortgages play in the financial planning context. So if you are interested in partnering with us so that we can refer our clients to you on an as-needed basis, regardless of where you are in the country, because we have clients all over the United States and in every state in America, please contact us. I want you to contact Mark Brogley. Mark is VP in my business development group, who is focusing on this issue, who's been working very closely with Dave already. You can reach us at our phone number at 888-PLAN-RIC. That's my phone number, 888-PLAN-RIC, and ask for Mark Brogley. His email address is mark.brogley, B-R-O-G-L-E-Y, mark.brogley at ricedelman.com. That's RICEDELMAN.com, ricedelman.com, for those who know that. As part of this partnership, what we are looking to do is to stage seminars around the country. We are very big seminar advocates. We'll do this year about 600 seminars around the U.S., and we're going to do a series of seminars specifically on this topic for consumers on the 11 great reasons to carry a big, long mortgage. And we want to partner with mortgage brokers who will bring your clients and prospects to the seminar so that we can do the explanation and the selling for you. And in exchange, we get to share in those clients to be able to serve them as financial planners and investment advisors. So by mutually growing our practices, serving the best interests along the way of our mutual clients, it's a win-win-win proposition. So if you are willing to work with us to help you build your practice, and you're willing to refer your clients and prospects to us, knowing that we're going to be endorsive of the kind of work that you do, please contact Mark Brogley, and we'd be very happy to talk with you.
Beautiful. So by the way, Mark or someone on Rick on your team, if you could put some of that information into the comment section on our Facebook page where we promoted this call, just so there's one place that everybody on the call is used to going, which is our Facebook page. We did promote this call with you. In that comment section, put a link and a phone number for anybody. So a couple things. I saw a couple questions come in and a couple comments. By the way, I will be looking at these and bringing them in. We've got about 10 minutes left to go in this call. But I see a big shout out from Bill Elliott, who said he won a loan using Edge and doing some of what we talked about here. No, actually, it was Charles Davis that did the shout out. I just won a loan because he was able to show the cost over time. It looks like he did a bit of a Ric Edelman strategy here, and the customer really appreciated that. Dennis Clark, you asked me to rerun the information on Todd Duncan. So if you go to your Mortgage Coach app and you put in Todd Duncan, and hopefully we'll have a Ric Edelman here one of these days soon, you can do that. I will also put a link to this video. It's just a 4-minute, 5-minute video, and Rick, I recommend you listen to this also, and you can see how Todd is providing some scripting. Again, he's a sales trainer to the mortgage industry. So a lot of these loan officers have been through his sales training, and he is showing how to be a mortgage coach loan officer, and what to say to a home buyer, what to say to a realtor, And Rick, I'm going to look forward to more leadership from you to help our loan officers and mortgage coach members deliver this kind of advice to the marketplace. So
I appreciate that.
Yeah, no problem. This makes sense for everybody. By the way, Mark just did a big shout out saying outstanding call, shared it. Thank you, Rick and Dave. So Mark, thank you for those nice words. And there's been a number of other comments come in. If you do have a question, bring it in. Also, I do want to remind everybody the assignment for this week on today's call is I want you to make an Edge video today. I would love to have you share that with me, and either myself or someone on my team will give you some feedback, but have it driven on what is your why. You know, why are you a mortgage coach member? Why are you a loan officer? Again, we do a lot of teaching and training on this. If you don't know what I'm talking about when I share that because you're new to our community, go back and listen to the last 2 calls. I want to remind everybody that we do this strategic call. It's like a sales meeting every Thursday at 9 o'clock. Every Tuesday at 9 o'clock, it's training. It's how to do an FHA versus conventional. It's how to do a PMI analysis. And by the way, Jacob, I think we should do a why a mortgage versus cash on this next Thursday's call. I think it's a great follow-up from what Rick has shared, where we could take some Ric Edelman concepts and then do a mortgage coach analysis on why someone who's thinking about paying cash for their home should do a mortgage. So this Thursday, we'll be sure to cover that scenario. Every Friday, it's basic training. So if you're new to Mortgage Coach and you haven't created 20 or more total cost analysis experiences yet, come to that. I want to remind everybody that these videos are put into our YouTube page. This call will be up within an hour. Also, a reminder for next Tuesday, I actually got the date wrong. Next Tuesday is going to be Tim Brahim and Ken Perry. So Kim Perry is going to be talking about how to really train and build your perfect loan process. Tim Brahim is going to be doing a why growing exercise. And it's also that you guys can be more valuable to home buyers, you can be more valuable to real estate agents, and you can deliver more value for everyone that you touch with your mortgage advice. Not be a rate quoter, an app taker, but be someone that's delivering value and advice that's integrated with your financial planner. Hopefully, and Rick, I'm going to give you another chance to share how people can connect with you, and hopefully we will continue to evolve this partnership in this relationship so that you'll be bringing financial advice integrated with Mortgage Coach, and we can bring that to the trenches. So everybody from the home buyer and the realtor has got this integrated message. So Rick, we've got about 7 more minutes. I'm going to see if I have some more questions, which actually they are coming in. Any kind of closing thoughts as we go into wrap-up mode here?
Well, again, thank you very much for the opportunity, Dave, for me to be with you today and impart this info. We're very excited about our opportunity to partnership with talented, dedicated mortgage brokers all across the country, and we look forward to working with you. I would, in addition to reaching out to us to express your interest in working with my advisors on the development of lead generation and seminar development and exchange of referrals and all that kind of good stuff, contact us at 888-PLAN-RIC and ask for Mark Brogley, or you can email Mark directly. His email address is mark.brogley, B-R-O-G-L-E-Y, at ricedelman.com. That's ricedelman.com. And if you take a look at my #1 best-selling book, The Truth About Money, it has a very big section on homeownership, including in there the 11 great reasons to carry a big, long mortgage. We know of a lot of professionals who buy the book in bulk quantity, which is really inexpensive, and hand them out to clients highlighting that chapter because it really helps to make a reader understand not only why they want to carry a big, long mortgage, why everything they thought about mortgages was wrong, but the book is 700 pages long, and so burying this information in the middle of a financial planning book really drives home the point that your mortgage is part of a financial planning process and really is a tremendous sales tool that you can use to help accomplish what you're trying to do.
Beautiful. And Jim McQuaig, any final questions as we wrap up today's call?
No, it's good stuff. I love the thing I love the most about your 11 reasons, Rick, is the flexibility that you have, the control that you have with your own money, and I think that's something that we can bring to our customers as we sit down with them. Just the idea of, creating opportunity to maintain flexibility and control of their money is the one that I've seen resonate with people really a lot. So, thanks a lot, Rick. Thanks, Dave.
Yeah, no problem, guys. So again, everybody, this Thursday we're going to be doing a mortgage versus cash analysis in the Mortgage Coach Edge scenario. We're going to be bringing more Ric Edelman strategies to the Mortgage Coach community. Do reach out to Mark Brogley. He is a tremendous evangelist of Ric's ideas and strategies. And, how about that? He's got some financial planners that are part of his network in your local markets. So how about that for a great opportunity to connect with a mortgage professional, connecting with a financial professional that really is working together in harmony around the mortgage as a strategic financial planning tool. So Rick, we've got a couple minutes left. What are the facts? I've heard these facts that people, I think I started early in the call, they have less than $100,000 in savings in retirement, but they misconsume hundreds of thousands of dollars. Do you have any facts or insights or any articles that you could reference around that?
There is a variety of data that I'm putting together in our videos that will have some statistics for you. There's a huge array of data from the Mortgage Bankers Association, from the Employee Benefits Research Institute, from the U.S. Census Bureau, from the Federal Reserve. There's a tremendous, from the National Association of Realtors, all have a tremendous amount of data to demonstrate the pickle that so many people have put themselves into. What I have found is that people don't often need a lot of facts and statistics because they don't really care about what's going on in America. They care what's going on with them. So making it very personal, making it very relevant to you and your family situation is really what people care about the most.
Yeah, it makes a lot of sense. Well, Rick, I'm looking forward to creating some content together. When I think of a perfect sales process, I think what you're bringing in is a perfect advice process that integrates with the financial planner. So what questions should the loan officer ask in order to create a total cost analysis, and then how should they deliver that advice in synchronization with you? So anybody who's a Mortgage Coach member on this call and you take some action with some of Rick's advice, I do want to do future calls like I did with Jim McQuaig today, where it's Rick and a Mortgage Coach member walking through a strategy. So Rick will frame something strategically, and then we'll bring it down to a tactical level on, okay, how do I have that conversation? How do I really have that cash versus mortgage conversation? How do I have that PMI versus put a little more down conversation, or should we put a little more down? So I want to bring some very practical success stories to the Mortgage Coach community and do it, just help teach these ideas and strategies. So Rick, let's go ahead and wrap the call up. Thank you for the time that you took while you're on this road show today. It sounds like this is like third or fourth time you've spoken to a large group today, and we appreciate it.
It's my pleasure. Again, thanks so much for the invitation. Look forward to working with you a lot, Dave, and a lot of mortgage brokers as well.
All right. Hey, Jim, thanks for jumping on the call to bring some feedback from the trenches. Really appreciate it, my friend. Take care, everybody.